My view hasn't changed. I've been long risk since November 2022, long crypto, long tech, and just haven't changed that. And it's been stupidly good. I just kind of left my brain behind and said, look, liquidity goes up over time, over the business cycle. These are the assets to own, and it works incredibly. You know, we've got these mega trends. Just ride them. Everyone overthinks it, over worries, short-term trades it. Meanwhile, it's printing generational wealth, not only in crypto, but in tech as well. Of course, you will have volatility. And the other thing is you've got seasonality of election years, basically up only with, one big wiggle somewhere in the summer. Generally, I don't see anything to worry about.
After 2 years of a severe crypto winter and a choppy spring, crypto summer is in full bloom, but not without its ups and downs. After the approval of the spot Bitcoin ETFs by the US Securities and Exchange Commission in January, the leading crypto asset experienced a significant upswing, appreciating by over $5,000 in a couple of days. But the rally soon gave way to a steep correction that took prices back below $40,000. At that point, even notable cryptocurrency investors expressed concerns that the Bitcoin ETFs would amount to nothing despite all the buzz and excitement. However, the correction also proved to be short-lived, and Bitcoin prices took off again before hitting over $73,000 on March 14th. The choppy price action has since resumed, and advocates and critics alike are again questioning the impacts of the ETFs and what lies ahead for Bitcoin and other cryptocurrencies in 2024 and 2025. Real Vision founder and CEO Raoul is a prominent cryptocurrency investor who remains resolute about the impact of the ETFs and the 2024-2025 crypto bull market. According to Pal, a renowned macro analyst and former Goldman Sachs executive, crypto is a gift that presents the rare and easy opportunity to get ahead of the faulty system and amass generational wealth. While Pal believes the ETFs will contribute significantly to price movements during the bull market, he expects the prices of cryptocurrencies like Bitcoin, Ethereum, Solana, and others to appreciate massively with or without the ETFs. Pal recently had an insightful discussion with Jamie Coutts, chief crypto analyst at Real Vision, about the Bitcoin ETFs, the ongoing pullback, and how this cycle compares to previous cycles. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
The RAAs do the same kind of thing. It's like they just often will say to their clients, we'll put 1% of your portfolio into discretionary stuff. So that changes. I think they all are aware how volatile this is. It's been sold to them as a volatile asset, and this is a long-term thing. My guess is there's more long-term holders. Later, you'll get the FOMO retail of everybody trying to do this. But right now, this is a lot of people like Bitwise, Fidelity, Franklin, everybody going to their client base, talking them through it, explaining it. This is more thoughtful allocation. The other thing that people haven't realized is you can now put it in your 401k. So the average millennial who's a buyer of the NASDAQ or the S&P 500 passive index products will buy this, and they'll buy it every 2 weeks with their paycheck. And so we will see a difference in the structure of flows, as Jamie's alluding to. It's just going to change. Probably means it's less volatile on the down cycle. It also could cause a full bubble on the up cycle this time around, because you've got numerous new participants who could enter. And, this is a limited supply asset and 80% of it's hoarded. So it can get pretty tricky. So I don't know how it plays out, but I don't agree with Jim Bianco. I know a lot of purists don't like it because it's an ETF and not people opening wallets and self-custodying. I actually think of it as a Trojan horse, where we're actually teaching people about this product. Before you know it, they understand why they're buying it, and they come into crypto land. I think it's relatively good quality holders. Also, Hunter Horsley hinted that I think it's on the quarterly statements. You'll see who the big holders of the ETFs are, and he hinted that you'll be surprised who's on the list.
We've already started to see accumulation by institutions at a sovereign level, whether that's sovereign wealth funds, the pensions, potentially nation states You've got mining operations now in several countries around the world where the countries themselves have co-invested with private mining companies. So, and these are countries that are sort of typically energy rich, and are significant players within that, within the energy markets. And I think they see the world very differently to, Europe or the United States or Western countries. I don't think we'll see any major announcements in the short term. I just think that, my working hypothesis is that they're accumulating. They've got access to virgin Bitcoin through the mining operations. If they foresee a world in which Bitcoin does become significant, they can avoid one of the major steps in disclosing and showing their cards by going to a BlackRock, going to a Coinbase to acquire coins. They have access to virgin coins domestically. So it's just, it's another sign for me that, the game has changed. I think Pomp said on TV a couple of days ago, this is a pullback for ants. This is a Bitcoin pullback for ants. I mean, it's not even 30%. We should expect 30 to 40% pullbacks in a bull market where we've seen 150% appreciation in just the last 12 months. So it's been a little bit unusual, and that's really the structural buyer of the ETFs that's smooth things out. I follow the derivatives markets really closely, perhaps more closely than I should, given I have just got scar tissue from the last cycle, because that was really what brought the markets, undone eventually in Bitcoin. I still think they're going to play a major role. I'm watching it just for the earliest signs that we're starting to see the buildup of concerning leverage and sort of behavior that is toppy in nature. And you still see very high open interest, but the funding rates have come down. Now the funding rates are still elevated. So we do need a reset. We need some of the open interest to go away. We need funding rates to get somewhere back to neutral. But it could very well be that they stay a little bit more elevated because we've got the perception ETFs are there. They're buying every day at 3 to 5 times the supply. I'm fine. I can take this leverage. And that sort of builds in, risks over the long term. But to your point, Maggie, we could pull back a little bit further, but I think, we're sort of at the halfway point in the cycle.
Pal's comments were made in response to claims by Bianco Research President Jim Bianco that the bulk of those buying the Bitcoin ETFs from issuers like BlackRock are retail investors. Jim's primary concern is that retail investors are not as committed as institutional investors, and they would balk en masse at the first signs of trouble. However, some of the issuers, like Bitwise's Hunter Horsley, have hinted that this is all mostly pure institutional interest. BlackRock is also buying IBIT and other spot Bitcoin ETFs for its massive multi-billion-dollar funds. During the interview, Pal and Coutts discussed their opinions on the crypto cycle, focusing especially on the kind of cycle they think this is. Pal has 3 scenarios of how the cycle plays out. The first scenario, which he gives a 60% chance of occurrence, is that this is a normal crypto bull market. Pal believes that even if this turns out to be a normal cycle, Bitcoin's price could go as high as $200,000 before the bull market ends in 2025. Pal's second scenario, with a 20% chance of occurrence, is that the larger adoption from the institutions will magnify the bull markets and take Bitcoin's price much higher. His third scenario is that this is a front-loaded cycle, and it will end sooner than everyone expects. He gives this another 20% probability. But there is one scenario the Real Vision CEO says he's most concerned about, a double top that will cause a world of pain before it gets better. Here are more clips from the video.
I do think that we get to around sort of 150,000 this cycle. I think that's fairly moderate. That's just looking at a halving of the returns off the lows of the cycle to the peak. And so I think we do half as much as we did last time, and that sort of brings me to around about 150,000. And the ETF flows are sort of hopefully, I think, baking in that that result. But I honestly don't know. It could go either way. I think the swing here is to really watch the derivatives market, because that brought the last cycle undone. And that's just the way things go. I've seen. The problem I think people have with forecasting is that they can look at the previous cycles and say, well, if this didn't happen, then we would have done this. Therefore, this is... So the market is the market. the end of the day, the price is the final verdict. So I just look at the last price and not take out any of the sort of events that happened during that cycle, whether it was a China ban, the liquidity cycle, whatever it is. Look at it and think about actually what that means for future cycles. I do believe we get a moderation, so I'm not in the camp of the 250,000, but I'm with you, Raoul. There's a probability that it will.
Yeah, it's the one that scares me is the short cycle. The kind of slightly stunted. I think that was the last cycle was like that. And I think we all have PTSD, so we can deal with that one. If they take away the punch bowl a bit early, we can kind of deal with it because most people are sort of expecting it. A relatively normal cycle, I think people are fine with. My fear is the 2013 double pump. That's terrifying because that was what, a 45% correction mid bull market. Everybody thought it peaked because it had already done 10x or 20x or 30x, whatever the stupid number was. And then it did like another 20x from that point.
We've got stocks rallying again. The Fed said they're going to ease 3 more times. So Raoul, is this just, risk on again? Liquidity's coming?
My view hasn't changed. I've been long risk since November 2022. Long crypto, long tech. And just haven't changed that. And it's been stupidly good. I just kind of left my brain behind and said, look, liquidity goes up over time, over the business cycle. These are the assets to own. And it works incredibly. We've got these mega trends. Just ride them. Everyone overthinks it, over worries, short-term trades it. Meanwhile, it's printing generational wealth, not only in crypto, but in tech as well. So just don't overthink it. Tomorrow will be more digital than today. So therefore, that's the secular trend. And the business cycle, we've only just bottomed in the ISM or bottoming. So we haven't even got anywhere. So there's nothing to worry about. Of course, you will have volatility. And the other thing is you've got seasonality of election years, basically up only with, one big wiggle somewhere in the summer. Generally, I don't see anything to worry about, unless even if we go to war with somebody, they're just going to print more money and then just drives the price up. I just don't have anything to worry about.
No bull market with crypto or any other asset is a smooth ride. Pal and Coutts say to expect the typical 20 to 30% drawdowns, but always keep your faith firm and your eyes on the big picture. According to the renowned macro analyst, the big picture is that central banks have ruined our chances at a normal, progressive future with their constant money printing and other reckless policies. We are essentially screwed, and the only way to undo that is by investing in crypto and tech, the only asset classes that have managed to outperform the Fed's balance sheet. Pal predicts that the overall crypto market cap will hit new all-time highs of $10 trillion before this cycle ends, then go 10 or 20x from there within the next decade, presenting a lifetime opportunity for all investors. Please share your thoughts on Pal and Coutts' video. What kind of cycle do you think this will be? A traditional one, a short and violent one, or an ultra-bullish one that will be significantly magnified by the ETFs? You can join the conversation by dropping your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.